Hi everyone and welcome to Inderes TV. Today we're going to talk about Neste with Analyst Petri Gostowski. Hi.
Hi.
I think every second company talks about that they're making transformations. It's kind of a buzzword. But Neste is a company that really has made a transformation. It was originally founded in order to secure the oil supply for Finland, or what's the history?
Yeah, I mean that's way back. But I think when we think about the transformation, it's been really what we've seen recently in the years. The transformation from an oil refinery company to a company producing renewable products. And put it in context, I think it's one of the biggest and most successful transformations in the industrial history of Finland. I mean, if you think about how much the value of the company has gone up, and I mean this is based on transformation from producing a product that will eventually have slowing down demand, and I mean we should get rid of fossil fuels at one point, and going into a product that has had a very successful runway and very profitable business and very attractive returns on capital. It's just you can't really think of many of as successful transformations.
Yeah, real success story in that sense. But if we look at the owner structure, how does it look today? I mean, if the main purpose in the beginning was to secure the oil supply, so how does the owner structure look today, and are there a lot of politics involved?
Yeah, like we can see, just above 1/3 is owned by the Finnish state, and it's also based on due to the fact that Finland wants to make sure that in any circumstances we have the ability to supply fuel, and we have the oil supplies. So it's definitely visible in the ownership structure, and I mean.
But how much does it affect on a?
To be honest, you can't really see it. I mean, it's been a success story. So I think maybe the state hasn't been involved in that much, as you can see from the success.
Yeah. So if you look at the most interesting part of the business is of course the one you mentioned, the renewables. But if you take a look at the bigger picture, it actually consists of 3 business units and one other part. So could you open up the bits and pieces for us?
Yeah, so basically you can split it in 3, which is, if you look at from the revenue side, the biggest one is oil products, refining fossil fuels, and then we have the renewables that can be divided into mainly renewable diesel for the for vehicles and for road transport, and then we have the small minor business areas, the renewable diesel for aviation, and then the renewable polymers and chemicals. And then the third business is the marketing and services business. That's basically the network of gas pumps in Finland. But in Neste's business, it's more important to look at the earnings and not the sales, because basically, depending on which year estimates you look, for example, but renewable products provide some 80% of their earnings. So it's actually the major contributor to the whole group.
Yeah. So if you take a closer look at the renewables, there's the aviation side, and this is a product that is already in use on the of some companies. Are you using it, or what does the market look like there?
Yeah, I think it's a market that's just being built. It's the market it's going to be a future market.
Yeah.
Neste's whole capacity of the renewables segment is some 3.3 million tons, and currently they have a capacity of renewable aviation fuel of 100 kilotons. So it's small now, but it's.
If you think about the future, that will really be something to.
Yeah, it's the growth is taking off. Looking at where the the regulation, for example, is going, and where the airlines are going. It's going to take off, and it's going to be interesting to see on what kind of growth rate it will accelerate. But yeah, it's going to be, say, 10 years from here. It's going to be very much bigger than what it is today.
What are the existing competitors in this field at the moment, and for the future?
Looking at the competitive landscape, there are multiple companies, but I think what is more interesting currently is that for long it's been said that the renewable diesel market for the road transport is somewhat smaller, and it won't attract as many investments in as from competitors. But when we go into the aviation fuel, it's a huge market, and we've been seeing many more announcements of investments to bring capacity online. For years, on the road transportation part, the market has, from a supply-demand situation, has been rather limited. I mean, there's been a very good demand. It's really interesting to see where we get into in the longer time frame when we have the bigger aviation market. We have the more competition. But I mean, looking at what's been said about investments and then on the other side, the demand growth, I wouldn't expect it to be oversupplied in some time to come. But I mean, it will be a different game in terms of competition.
Yeah. If you talk about the renewable diesel as well, is that something that is really in use also at the gas stations? Is it something it's possible to buy for the regular customer as well?
Yeah, I mean, we have it. It's supplied in many places here in Finland, and it's also supplied in other countries, for example, the Baltics. So basically, going into the gas station, you can decide to either buy the 100% renewable diesel or then the fossil-based. But of course, because we have these legislations that you have to blend renewable diesel into the fossil-based diesel in Finland, so even though you wouldn't decide to buy renewable diesel, you're actually putting some of that into your tank.
Consume it anyway. Yeah, if I understood it correctly, then in the past it has more been about actually the capacity for Neste. That the market potential is enormous, but the capacity hasn't been enough to produce. But in recent years, they have been making a lot of investments. Could you shed some light on that, on where they are going at the moment?
Yeah, I mean, like I said, it's the demand has been very good, and Neste has basically for years sold everything they can produce. Their capacity is currently at just above 3 million tons. And currently, they're finishing capacity addition at their Singapore site. This will bring new capacity online in the beginning of next year. Just recently, they announced a joint venture in US.
In California.
Yes, in California. This will bring some 1 million tons. And also, just not too many weeks ago, we got the announcement of the additional capacity coming into the Netherlands. So looking at all these investments, when the last one of these, which is the just announced Rotterdam investment, they will more than double their capacity up to just short of 7 million tons, and that will be in 2026. So basically, you're looking at a twofold capacity increase.
Yeah, interesting. Well, the figures are so big, it's hard to grasp, but it's a lot more at least.
Yes, it definitely is, and it just also highlights the expected growth in the market demand. Yeah.
I'm referring to your own words, saying that the business areas have different medium size, because we're talking about so different business areas here, different medium and long-term outlooks, and also very different type of drivers and risks. So when you look at Neste as a company, as an investor, so how would you think about the valuation if you look at it as a whole?
Yeah, I think it's important to separate the businesses that are the business that's related to the oil refining and then the renewable part, because like we know, we're trying to instead of using fossil-based fuels, we're trying to go into these renewables. It's a big transformation that's already started, and it will be continuing. So looking a long way into the future, the demand for the fossil-based fuels will come down, whereas the other one is growing, like we just discussed. So in this kind of business, when you have eventually the demand will be coming down, it's tougher and tougher to keep up with the profitability. And then on the other hand, I mean, Neste is enjoying a first mover advantage in the renewable business. There, big or huge margins and very high returns on capital. So these two factors, I mean, the growth and then the earnings and returns on capital, should be valued on totally different valuations, and therefore when I look at the business, I actually have this kind of sum of the parts model where I apply different valuations for all business areas, just due to these facts that I just mentioned.
Yeah, and I really recommend to read the report about this one. So if you think about the dividend policy, it has been quite good, or from an investor's point of view, is it on a stable basis, and how would you comment on it?
Yeah, Neste's policy is to distribute at least 15% of their comparable earnings as dividends, and I think, I mean, because their earnings have grown so much, the dividend has been increasing a lot. But if I look at the company from an investor perspective, I see it more as a growth company than as a typical dividend company. I mean, just a few years back in the first year of Corona, they cut their dividends. I mean, they have a very solid balance sheet. They maybe didn't need to cut their dividends, but I mean, I think it's signaling that they are pushing more towards investments and to the growth than maximizing current dividends, which I think is a very reasonable thing to do. But if you are a dividend investor, I'd probably look somewhere else more. And this is a different type of profile I'd see.
Well, let's get back to the renewables part a little bit still, because ESG is still a topic. And how would you define this case? Is it, given this background that we really discussed, is it an ESG case or not? What's your point of view?
I mean, their business is about supplying renewable fuel and replacing fossil-based. So yeah, I mean, could be a no-brainer.
Yeah.
ESG, or from the perspective of E. But on the other hand, you are supplying fossil fuels. So yeah, I guess we'd have to find a ESG analyst to comment this. I mean, they are trying to bring down their customers' emissions, for example. So yeah, I mean, that would be a true ESG analyst. But I'd say that we need to find someone to
it's a tricky one.
to make a more solid statement on this, and then also be an expert on the S&G parts, which often are forgotten when we talk about ESG. It feels like it's only the E and the S&G are just for the ESG shortening.
Yeah, but it's a tricky one from the E perspective as well.
Definitely, and I mean, I think it's in a broader context, the whole ESG landscape is something that's only evolving. Yeah,
taking its form. So far, 2022 has been a record, or record after record for this company. But could you summarize the highlights of the first quarter this year, and what the investor should pay attention to in the near upcoming future?
Yeah, I think you can say that on the renewable diesel side, they've continued the very good business performance, and then they had some nice tailwinds from the market. Whereas then on the oil products, there are these same tailwinds basically from the market. So if you look at it on a more broader perspective, renewable products has been able to increase their productions. They've been working for a long time to creep the capacity up bit by bit. They've been successful. New production records, also very high sales margins. So a very good performance. I tend to think that they have still been benefiting from the market conditions where we've seen the prices of fuels and especially the diesel going up. So this, in my I expect this to have been giving some lift to the sales margins. But despite this fact, the renewable products has had a very successful year to date. On the oil products, if you look at the past few years, it's been a really turbulent time. First, we had the demand slowdown due to Corona. We were talking about oversupply. Now we had all the market, all that's what happened on the market due to the Russia starting the war and refiners getting rid of the Russian oil, and this has really lifted up margins in the oil products business and benefited. I'd expected, or we've already seen the margins of oil products come down, although they are somewhat high in the historical context. What is interesting to see is, we've been for a long time talking about the transformation to renewables, and basically what's happened due to this is refiners have cut investments into the refining capacity, and now that we have a very good demand situation, we can see that the market is tight and we have higher refining margins. Where will the supply and demand balance in the future in oil products is interesting to see, because we know that the companies are not willing to invest there when everyone around is saying that they invest into renewables, and then
it's a dying business.
So why would you invest? So we'll see what happens in that front in the future. It's also very interesting.
Yeah, but you mentioned there the war. How dependent is Neste on Russian crude oil and natural gas?
Neste used to be using a lot of Russian crude oil. It was some 2/3 historically. In the end of, or on Q2 just now lately published, they had some 12% of their oil that they used was this Russian crude, and it was due to the fact that they had already ordered before, and then they cut orders in the beginning of the year when the war started. But those tankers were still on their way, and it won't be long when they've totally stopped using this. So it's probably, we're talking about a few months when they will be totally converted to other oils. Yeah.
So a good half year so far. But what about the cash flow situation?
Looking at business like this, where you have a lot of fluctuations in the prices of your first of all oil, but you're also your end products, and also there's this kind of typical maintenance season on the second half. We know it's typical for Neste to tie capital in the first half, so this has really limited their cash flow. I expect typical seasonality to help them in the end of last year, but then there is also this fact that they have to be ready for the maintenance on the second half, and also given the exceptional circumstances, I would expect them to keep a little higher inventory when it comes to oil, for example, and fuel. So probably a little bit tougher year in terms of cash flow, but despite this, they had a very solid balance sheet, so they will be able to continue with these investments and pay dividends. And Neste, in the longer term, I don't expect any problems with cash flows.
Yeah. So what about the financial situation when you think about all the investments made and more investments to come?
Yeah, Neste has been very prudent on their capital allocations and looking at their balance sheet. They've been on more of like a net cash position for a long time, and also maybe some investors have been wondering why keep such a good shape on your balance
Yeah.
sheet. I mean, why not take more debt? But I mean, looking at the huge investments they're making, I think it's rational to keep a very solid balance sheet, and remembering all the fluctuations on the markets that you can see in the short-term cash flow fluctuations. So it's very understandable. But all in all, yeah, it's a very solid
yeah.
position. So and we have to always remember that at this current pace, what they're doing earnings, they are every year the cash flow is coming in at a good pace. So they have all they need to provide the capital
forward
for these investments.
Yeah. So on a solid ground.
Definitely.
Yeah. Last but not least, how do you see the valuation at the moment?
It is, in my view, somewhat rich, but I mean, looking at the performance, it should be rich. But I think what an investor should think about the valuation is what we see currently is the huge growth potential in the renewable products. But remembering what we talk about, competitors coming to the market, their capacity will be growing, and then if we think about the fact that at some point I would expect competition to take down the margins in the renewable products business. Yeah. I'm not talking about this year, next year, or maybe the year after that, but in the long term.
A different landscape.
Exactly. Yeah. And if you pay a high price for the growth now, you might end up into the situation that you've eaten out the future profits because you've paid a high price for the future growth now. So I think you need to be balancing with what will you pay for the growth for the coming years, because we know that at some point the margin, they have to come down.
Yeah. Well, that's a really interesting and well put point, I would say.
Thank you.
Thank you, Petri Gostowski, for these comments.
Thank you.
Thank you.